Morning, everybody. How are you all doing? Happy Friday. Happy Friday, Danny, Paul, Mr. Lunary, Joe. How are we doing? What's all this community stuff? You notice everybody's now got these little icons next to their names. This is new. I don't know what this is. Got this community thing, and there's now a community leaderboard. Mr. Lunary, you are number 1. Joe, you are number 2. Danny, you are number 3. I have no idea what it is. Oh, there's a little question mark. There we go. What's the leaderboard? A place for fans to stand out from the community. The top 3 get special badges in live chat. Resets every stream, so you can always try again. I didn't turn this on. You'll need to collect experience points or XP. Here's how you get them. Send live chat messages. Send super chats. Definitely do that. And super stickers. Well, there you go. You are now all in competition with each other. Go. Know what that is? Well, I do know what it is now because I've just looked it up. But yeah, anyway, there we go. We've now got super chat, whatever that is. Community. Morning, Ro. How are we doing? Virginia, Joe. Joe is number 2 now. Joe, you're number 2. Keep going. This is just going to encourage you a lot to chat, isn't it? So everyone's just going to spam crap onto the keyboard, and that basically is going to get you the top result. I might have to do a little competition for people that get the top spots. I don't know. Right, market's open. It is 5 seconds until candle close. So ranges are in. Oh, that's too close. So we gapped up there at the 5-minute candle. So we didn't get a trade on because we gapped. So we'll see if we can pull back inside that range and maybe get that on. But that was wouldn't have got that on. Would have been triggered with a pending order if it had placed it, but a limit order rather. No trade on the DAX. 60-20 out of 60-24. Doesn't get much closer than that to taking a trade, does it? So yeah, if you're using ADR 10, I would imagine you're on that, or that would have triggered the ranges. So we'll see how we go. So just a quick recap of yesterday. Obviously, it wasn't live streaming yesterday, but did a grand yesterday. It's been a great week. So very nice clean breaks. You can see all the trades there. Very nice and easy day yesterday. DAX clean break. Everything was a clean break. We had a little bit of chop in the US session, but all played out. So yeah, really good day yesterday. Again. So we'll see where we go today. We'll come back after the next 5-minute candles closed on that. News-wise today, we've had this morning the CPI for Tokyo. So yesterday's news, we had GDP for the US and unemployment claims. We had some big moves yesterday. The euro specifically, very big day for the euro yesterday. As you can see, we had 200 ADRs on a few euro pairs yesterday. This is to do with Trump tariff removal, or rather Trump being taken or having his tariffs removed because of the illegality of them. So we're basically back to square one now, and there are no Trump tariffs. So the next thing is, what's Trump going to do now? He's going to find some other way of basically getting us with his tariffs. So we had the some fairly big volatility yesterday, but that was more on the tariff news than anything else. So unemployment claims, unemployment went up. That was kind of expected. GDP did better than expected, but not by much, a 0.2. So there was no real news variance yesterday. We had Bailey speaking yesterday as well. Just go back yesterday evening. It was after the news about the tariffs. There you go. Appeals court temporarily halts ruling against Trump tariffs. Reinstates Trump tariffs during appeal. Oh, I missed that. Okay, so the tariffs have now gone back on again. I missed that. It was at 8 o'clock last night. I haven't looked at the news this morning. Right, okay. So we're back in the tariffs again. God, this is so hard to trade through. There was Powell stuff. Powell met with Trump today at the White House. That would have been an interesting conversation. But you can see there was nothing really from Bailey yesterday. So not really much news that gives us any indication of direction yesterday. Overnight, we had the Bank of Japan stuff. So the CPI for Tokyo came out as forecast. So it looks like they're getting their forecast quite right. Still too high. So interest rates going up in Japan, meaning a strong yen. That was about it. So there's your news covered. Australian retail sales this morning came out at -0.1, but I mean, it's in retail, so it doesn't really tend to do a lot. So as you can see this morning, we've got no ADRs at the moment. We've got quite a few weekly range extensions. Pound yen is the biggest extension at the moment, so we might get a pullback on that one. Oh, that's already happened. That was yesterday. So you've had to pull back off of that. But yeah, so we'll see where we go today. I took some exposure on the Aussie New Zealand yesterday. So I got out of €1 yesterday. So this one I've banked twice on now. Oh, sorry, 3 times. So sorry, that was just one trade. But that was initial trade, second trade, third trade out. Added it back on as it came down. Fourth one out yesterday on that big parabolic push. I had an opportunity to close the whole thing out yesterday, but I'm not going to do that. I'm going to hold it because this is a very big parabolic move, this. So I'm expecting a pullback continuation on this today. So I banked that yesterday. And the only other thing I did yesterday was take an Aussie New Zealand trade. So I got out of the Aussie New Zealand shorts last Wednesday. So as we pushed up yesterday, we had that lovely push up into propulsion yesterday. Zoom in. So this lovely push up into propulsion and rejection. We had this here basically. So this second propulsion gap that formed as we put that reversal alert in. What I was hoping was we were going to try and find the bottom down here because we've had quite a nice long drop. And we were going to push into propulsion. They were going to get beaten down, and then this propulsion gap would hold. You can see for like 4 hours there, it held. So I decided to take a long and anticipate a new high going in, basically, and coming back up to retest these highs. But this morning, we've pushed back down again. We haven't gone down below that low, so we are still bullish, but it's still going down. So the reason I took that trade, obviously, we're in this big old downtrend at the moment, but this was a lovely multi-week rally we pushed in here after this reversal. So the plan is basically either we're getting in here on a 50% retracement and we're going to put in a new high to test that month, or we're going to pull back into that propulsion gap and then hopefully get a bounce out and pull a 50% retracement on this downward leg. So the plan is obviously this is either going to hold that low yesterday and we're going to push up, or I'm going to scale in to a second position down to there, and if necessary, a third position down to the double bottom. By that time, we'll put that whole leg in without a retracement, so we'll be looking to push back up into this propulsion gap. So I took a long on it yesterday. It's more expensive to trade it long than short, but I'm not too worried about swaps at the moment. So it's all right. It's 760. So yeah. So I'm going to end up on, because it's the last trading day of the month, I'm going to end up on a 5% month, which is all right. Obviously, this month here is 82%. So evens itself out. Right. Okay, so we... that's annoying. Oh, my God, what a mess. So stopped out on the FTSE straight away. Look at this. What a horrible, horrible open. So I'm going to stop out on the FTSE short. There we go. So out of the FTSE short, that's triggered off of the low. What a horrible candle. Look at that. Huge bull candle. Huge bear candle. Now we're putting in a big old bull candle again. Horrible price action. So yeah, no trades on the DAX this morning. One loss on the FTSE. Let's just check my FTMO account. Same thing. Not out of that yet, though. I haven't stopped out on FTMO. Now, this is the intricate differences between different brokers. So FTMO's triggered the short, exactly the same strategy, but I haven't been stopped out on FTMO. I have been stopped out on my own account. So if this now collapses down, FTMO is going to bank a profit. My account will take a loss. Same strategy, same levels, same settings, exactly. Slightly different spreads, slightly different price action, completely different result. Long term, profitable. Short term, different brokers, different results. Morning, Peter. Morning, Monkey. Morning, Gregors. How are we all doing? Joe's still in number 2, everybody. Come on. Look. Got to beat Joe. Got to talk. Look, Virginia has only said one thing this morning. Morning all. And is for some reason in 3rd place. I don't know how this works, but anyway. Right, so let's run over and have a look at the news for the week. So today, morning Elevated, morning Robert. So today's news, obviously we've had the retail, we've had the yen CPI. The Spanish CPI has just come out at 1.9. The Spanish CPI doesn't make up an awful lot of the inflation for the Eurozone. It's not one of the bigger contributors. The German is, though. So this morning, we've got the German preliminary CPI numbers for the month coming out. They're forecast to be down. Is it based on personality? You've just lost your spot somehow. You're now in 3rd. No, you're still in 3rd. But your badge has disappeared. I don't know how this works. So, yeah, German CPI is important. That's coming out this morning. It's 6 states. They release the numbers. They trickle the numbers out as the states release the numbers. So we get the overall number released when the 6th state has declared. So keep your eyes on the news this morning. You'll see the German CPI numbers being trickle-fed out. That potentially could move the euro today, and obviously would move the DAX potentially as well. But it's not a release. It's at some point. So just be aware of that. We've got GDP and PCE for the CAD and the US this afternoon. That's an hour before I come on this afternoon for the US Open. So that's all your news. So this week, from a news perspective, obviously, it's been fairly broken because we've had a bank holiday. We've had the Aussie CPI and the New Zealand interest rates, which were the main movers of the week. And apart from that, there's not really anything that's impacted impacted the markets so much this week. We've had news spikes, as we usually do, but from a general perspective, we're still sideways. We haven't had any real solid, strong breakouts on anything. There's no real directional change on the dollar. As you can see from all the charts, we are still in ranges. We are still sitting sideways. There is nothing moving at the moment. The market has no directional bias. It just doesn't know what to do, because until Trump goes, basically, we're going to have 4 years of uncertainty. So it's all over the place at the minute, the market. So it's a great opportunity for range-bound trading and for position trading. You're going to find it hard not to make money. And you're going to find it hard to get into decent drawdown, which means you're not going to get so many big positions on. But, you know, it's easy to make money in this type of market because it just goes up and down. As long as it goes up and down, we make money. If you buy it, you wait, and it goes up, you get out. Same for the sells. So it's a very easy way to make money, this market, but it's hard to get in because when you spend a lot of time in ranges, you're always waiting for yourself to get to the bottom of a range or to a point, and it takes a long time for the market to get anywhere. So signals are few and far between, which is why I'm not having, you know, a bump a month, because nothing's moving. I've been in this pound US dollar flicking between 0.5% to 2% drawdown for weeks, and that's all I've been doing in it. Yeah, so it's very hard to sort of bank, but we have got some, you know, this looks nice and bullish from a market structure perspective. We've just had a reversal alert in, so the likelihood is, I think, we're just going to come back down here again. This is a failed breakout to the upside, but if it does continue to go, it's not getting anywhere very fast. So, you know, for me to get out of this trade, it's going to take 4 to 6 weeks, which, you know, it's not unusual for position trading, but it's just, I'm banking as we go because you just can't get any decent, strong movement. There's no news events coming out that are making the market go mental. This is what we're missing at the minute because the market's too scared to do anything. So, because you just don't know what Trump's going to say next, do you? So that's my current exposure. Aussie Aussie New Zealand, as I said, took first long on that one yesterday. Aussie US, I've got out of the shorts on Tuesday. I can't find any reason to get back in at the moment. It's coming down actually now. So I'm watching these lows at ADR. So if there's an alert on ADR today, Aussie US, that's a decent opportunity. Yeah, so we're down at the weekly low, previous monthly level, and we've got these other weekly backups for 2-week low and 3-week low here out of a propulsion gap. So if we can get down to here today, Aussie US, anywhere down here is a decent buy zone between 100 to 150 ADR for a first entry. The downside to taking these trades at the moment out of these ranges is if the ranges do break, you got a hell of a long way to go. So again, US, is it or isn't it? We just do not know what's going on with the dollar at the minute. So, but yeah, good looking opportunity potentially coming up on that one. Swiss yen got out the longs on Wednesday. Again, this is prime example of what I've just been talking about. Shorted it out, longed it out, shorted it out, longed it out. Didn't get up here, which is where I would look to short it. We're just pulling back. So if this sits around and does this now, I'm not going to take a trade on it for days. Yeah, there's no extensions. It's very hard to get RSI extensions on at the moment. If you look at the dashboard, it's flat, it's white. There's nothing extending. If it is extending, it's literally getting into here and lasting 1 or 2 candles and then turning off again. There's nothing pushing anywhere. So you've just got to grab what you can when you can. Somebody showed their P&L in the position trading group on Discord yesterday. Started with in January with a 50k account, up 40% in 5 months, just using RSI 7030. Obviously, and they traded through the Trump tariff announcements and survived absolutely fine, trading all instruments. Again, overexposed a little bit, but you can't help but make money in this type of market when it's like this. But equally, it's hard to get an entry. Yeah, if you're looking for mean reversion entries, the thing's not getting any extensions, therefore you can't mean revert it. So you had one there, as you can see, but other than that, it's hard to get in, isn't it? So yeah, that's coming down nicely at the moment. I'm already in that one short. Euro Swiss got out the longs on Monday, Tuesday. We're sitting in propulsion at the moment. Looks like a great buy out of propulsion. Your backup would be down here, and then obviously monthly low, which you would scale in. So first entry, second entry, third entry somewhere down here, potentially a fourth. You could get into 4 potentially in that distance. ADR's 49. That is 120. So you'd only get 3 positions on that, really, max. I mean, this you got Wednesday's low, yesterday's low, Monday's low, and this is your propulsion move on Monday. But look at what you're going to get out of it. If you get in here, you probably just had a reverse alert on 5. Yeah, you just had a reverse alert on the 5 minute, not on the 15. So if you get in here, up to that high, that weekly high, you got 50. So you got 1 ADR. That's all you're going to get. Euro pound, I'm long, obviously, took that one off, looking for a pullback re-entry down here. So if we come back and retest this low from yesterday, that's where my next entry will go in. I've got 1 in profit already on it. Average is literally there. So any kind of propulsion hold today. So if this propulsion gap holds today, that's fine. Riding into next week up into these highs, potentially all the way back up into 200 ADR to the upside. So loads of room on that. Pound US dollar, I'm short. Again, took one of those off, as I said. So just looking for a correction on this. Now, this is a tricky one because this 61.8 retracement just gets me out kind of at a break even now, but we'll see where we go. But if there's any other FX pairs you want to look at, let me know. Oil's in a good spot as well. Look, you fancy a long on oil. Back up, you've got 125 ADR up into the top propulsion gap. We've got this propulsion gap, which is held 3 times up here. So you've got lovely upside there. But again, it's one of those, if it breaks, I don't think oil's coming down. Forecasts for oil were down at $50 a barrel. I don't think it's getting to $50 a barrel. It's not really able to get there. Since that forecast came in, when the Trump tariffs came in, they were saying, right, $50 a barrel. Since that, we haven't gone anywhere. I'm struggling to think we're going to get down even to retest monthly lows, but it is obviously in a downtrend, oil, but that looks like a lovely buy, doesn't it? I'm not taking it. Trading oil. Just catch up on the chat. Morning, it's time. Fire Christ, are you trading any other prop firms? No. I don't normally trade prop. The only reason I'm trading this FTMO account, it's not going to be a good day today, I can tell. The only reason I'm trading this FTMO account is because somebody contacted me saying it doesn't, well, the conversation went along the lines of, your EA doesn't work on prop. And I was like, what do you mean it doesn't work on prop? It doesn't make money. I was like, right, okay, what do you mean it doesn't make money? It keeps losing. So I said, right, okay, well, here's my results. I showed them the screenshot. This is my results with the EA, which is making lots of lovely money. And they said, well, it's obviously FTMO. So I've set up an FTMO account, stuck the EA on it, and I'm trading it. So as you can see, it's up 1600, 16%. That's not the right starting balance. 70,000 should be the right starting balance. That'd be nice, wouldn't it? So up 2.38%. We've only been trading 2 days on it, but it's up. Yeah. So I'm just trying to prove to this person that it's not the EA, it's you. Because the EA is a dumb instrument. What it does is it places orders on a chart, and then price triggers the orders and market moves. What you do after that is why you make money. It's nothing to do with the EA. The EA is a dumb instrument. It just places orders and trail stops. That's all it does. So kind of just trying to prove the point that there's nothing wrong with the EA as in FTMO. FTMO is doing pretty much the same thing as this account. Taking pretty much the same trades. You're going to get variations. I think their point was they're getting different results to me. Yes, you're going to get different results to me because there's no 2 brokers on the planet that are going to give you the same spread at the same time. Look at the price action on the FTSE here and that gap. Yeah. Look at the same chart with FTMO, right? Look at the size of that gap. Yeah. FTMO is totally different price. You're not going to get the same results when the price is completely different. This is why I've set it up. So I don't normally trade prop because I don't need to. This just costs me money, basically. Every time I do a prop valuation, it costs me $300 or $400. Doesn't make me money, does it? Because as we know, prop rules don't allow you to make money. If they did, everyone would be a millionaire. Unfortunately, we're not. Would be nice. Right, DAX has broken long. Unfortunately, I'm not going with it today. There you go. So again, another example, FTMO, right? FTMO, minimum range, 6054, range, 5900. Global Prime, minimum range, 6024. 6054. 6020 is the range that's put in on Global Prime. 5900 is the range that's put on an FTMO. Totally different price action. Same chart, same time, real time, live, totally different figures. You're not going to get the same results. So unfortunately, those ranges are too small on that. So the 30-minute range is about to go in on close of this candle in 2 minutes. So the 6-bar range is going to be tradable. Already in a trade long on that one, so that will just go. 6-bar range will also trigger on this account as well. So we'll see where we go on those this morning. It's based on personality. Yes, Virginia. Let me have a look at the community results. Virginia, you've been knocked out of number 3 spot. Look, Lunary Elevated Trading Hub has gone into number 2. Rob is in 3rd. Virginia, you've dropped down to 5th. I don't know. It's fun, isn't it, though? So much place to go down. Don't know what I was talking about then. Morning, Nav. Morning, electrician. I had you round the other day. My light switch was broken. Embarrassing story, right? My light switch in my room was broken for 6 months. Basically, one day I put my lights on and they didn't work. So I was like, right, I'll fix that. So obviously I've got a light up there and I've got a switch on the wall. So I tested the switch, thought, okay, I'll change the light bulb. That didn't work. So I turned the fuse off, okay, removed the socket from the wall and found the cable was hanging out. I was like, I know how to fix this. So I put the cable back in, the power cable back into the switch, screwed it on, put it back in, turned it on, still didn't work. So I thought, that's weird. Maybe the switch is broken. So I went down the shop, got a new switch, replaced the switch, wired it back up again, put it in, turned it all back on, didn't work. Changed the fitting on my ceiling to a new one and put 2 different bulbs in it, still didn't work. So I was like, okay. So I lived with it for 6 months and then I bought this thing, which is just lights I can turn on with USB. And then I thought, I'll get the electrician around to have a look at it. He comes in, right, undoes the plug socket from the wall, there's the switch, looks at it, puts his little machine on it and goes, I see the problem. He unscrews the cable and puts it in a different hole in the switch, screws it back up, flicks the switch on. So me, when that cable came out, I didn't realise there was 4 places, not 2 places, to put the wire back in. I put it in the wrong hole. So there you go. Little electrician story. So I said to him, send me an idiot invoice. You know, it's one of those invoices for a call-out charge, yeah? So he call-out charge, 60 quid. Comes out, unplugs it from the wall and goes, yeah, you put it in the wrong hole. Gone. 2 minutes. He was here for 2 minutes. £60. It's an idiot invoice, isn't it? Idiot. Anyway, that's a good month, 5%. No, it's not. That's crap month. That's wrong. No, it's not. Yeah, 5. It's not a good month. It's a bad month. It's an all right month. It's not a loss month. To me, that's a bad month. To me, a good month is 10%, 15%. A bad month is 5%. A bad month is a loss. That's a mediocre month. What's the drawdown? I don't know. I don't keep track of drawdown. It's irrelevant. If you're focused on return on drawdown in position trading, you're focused in completely the wrong place because it's not. This is irrelevant. This is your cost of doing business. If you open up a business, you've got a cost attached to it. This is your cost. Yeah, your cost is a variable. Your cost is a variable the market makes. You make the profit. The market makes your drawdown. It's what it is. I think it's gone up to 2.5% maybe. I don't know. If that sits at 20%, it's irrelevant. It sits at 20%. If the market pushes so hard, it takes me into 20% drawdown. Fantastic, because when it pings back, it's going to go really fast. So it's what it is. I do keep an eye on it. This is what the dashboard's for. The dashboard is to alert you. So we're sitting in the orange at the moment, which is, it's all right. It's fine. When it goes red, it's like, okay, now I need to start focusing on this. Until this goes red, it's not a problem. When it goes red, it becomes a problem. So you can set that in your EA settings. You can set what you want your limits to be. So mine is 3%. Yeah. So if a single trade, any single trade goes 1% into drawdown. Yeah. So a single trade goes 1% into drawdown, it will turn red. Yeah. If any individual symbol, i.e. position, goes 3% into drawdown, it will turn red. Yeah. So there's 3 different thresholds: tomato, red, and fire brick. This is tomato, which means it's over 0.5% in drawdown. Just business as usual. 1.5% is we need to start thinking about this because it's obviously the trade's not working out. So we need to make sure we keep an eye on it and plan the trade better. Firebrick, over 3% in drawdown, we got a problem. That trade idea initially has failed. So we need to either start looking at doing drawdown control on it, or we need to make sure that we've got a solid bounce point that we're going to get a decent reaction at, that we can use to put maybe aggressive drawdown control on, or if that is invalidated, just start cutting it. Yeah. So it's a color coded comfort system, if you like. Same with exposure. If you've got too much exposure on, Dash will warn you and tell you. And equally, if you've got loads of things flashing green at you, take the bloody money. Sounded like Michael Caine then, didn't I? I only told you to blow the bloody doors off. Right, long, both. So we'll see if we can recover that today. Let's quickly look at, I will look at that US dollar Swiss. I did see your message, Robert. So upside on the DAX today. We'll have a look at the indices in a minute because we're at a really critical turning point at the moment for this bull bear market. The upside on this, obviously today, yesterday's high, we're unlikely to put in a day like yesterday because of the tariff news. So we've got this big, strong drop yesterday. I think a 50% retracement on that is doable potentially, but getting back up into that propulsion gap potentially may be in trouble because I think we're on our way to the initial gap fill. But we'll wait and see. So long partial. I think I might just move that down ever so slightly for the upside. The FTSE. Again, I'm just going to move this down into that area here. This is just giving me a 1-to-1. The only reason I'm taking a 1-to-1 is because I'm being a little bit cautious because obviously gone straight into drawdown this morning and it's a very choppy open. So if we break the higher, this pre-market highs, I'll be looking at this accumulation here for potential bounce point. So I'll take a partial there. And then obviously if we are going to run, brilliant. But I'd like to get 2 partials taken today if we do break, just to get the money back in the bank. Seems it's struggling today. There's a lot of gaps. There's no volume today in the market, as you can see. There's gaps everywhere. Almost every candle's gapping, which means there's no volume because the market's having to drive to a new level to find price to fill. So when you're in a low volume market, you get a lot of slippage, which means you get decent, strong movement like we're having. But equally, as soon as a large order comes in, it will flood straight back through all of that liquidity that was driven it, that's driven it up, and it will. And this is why you get this big, strong, like Christmas tree, green, red pattern, because there's not enough volume in the market to hold price at a specific point. We'll see how we go. Right, US dollar Swiss. So you've just had a reversal alert retest this morning. So that propulsion gap is holding. You've got upside propulsion gaps on the 4-hour there from yesterday's move. So long term, obviously, we are bullish ever so slightly, but not much. So that's your, this is the tariff news. This is where we're holding on the US dollar. Now, the Swiss franc obviously is a safe haven. So you can see obviously what happened yesterday. As soon as there is fear in the market, the safe haven rallies. So the Swiss franc and the yen yesterday, obviously big beneficiaries because the market panicked, liquidated all risky assets like stocks and commodities and stuck it straight into, or stocks and everything basically, and stuck it straight into the Swiss. So now that that has undone itself, probably this will undo itself. So it looks to me at the moment like a lovely long straight back up into propulsion. You could easily get 150 ADR out of that today. Propulsion gaps holding to the downside. There is no downside propulsion gap targets apart from this tiny little one here. There are tons of upside propulsion gap targets off the back of the tariff move. So Yeah, looks like a lovely long. Didn't quite get extended. Obviously, you had an RSI extension yesterday. If you'd taken that, you'd be out. That was the last RSI extension. You got a lovely bullish divergence on this week as well, look, or the last 2 weeks. So price put in lower lows, RSI put in higher highs. So bullish divergence, which is why you've got the pop. You've now got obviously just normal price action unfolding. So your reversal alert's just gone in. Lovely 3-bar reversal. Pull, pause, push. Not a lovely one. I mean, it's not textbook, but it's there. There's your reversal alert. And obviously then we've just come and retested the reversal alert. Long. Good. That's why bankers have retrained to be electricians and plumbers. Yeah, I know. He hasn't invoiced me yet, though. I told him to invoice me, but I haven't received one. So I'm hoping he's just going to go, what an idiot. Anyway. WDS 5% times 12 is 60%. There are plenty of guys running funds earning 7-figure salaries who cannot even beat the index, which is 6 to 8% per annum in the world. In their world, you would be a superstar. Yeah. But in their world, their fund managers would not allow them to take a drawdown of 20%. Unless they're a pension fund. Pension funds easily take 20 to 40% regularly. But, yeah. But, you know, it's... what it is. Why do they even call coders engineers? I don't know. Is that a joke? Why do they don't call coders engineers? Software engineers, I suppose. I guess, yeah, maybe they do. I don't know. I call them coders. 5% in the month is more than enough. Yep. It is, but you try telling everyone else that. I've been telling everybody that for 5 years on YouTube, but no one else tells you that, do they? Unless you're putting in like 20, 30, 40% a month, you're a crap trader. But this is what consistent traders do. Not, you know, what the numbers you see here are, you know, it kind of, you have to, this is the FTMO account, but on this one, you kind of don't ignore, you know, don't be led by this number, this 79%. Focus on this, because this is basically relative to the account size. I don't put all my money in the broker when I'm trading scalping indices. You just top it up as you go. So this is, you know, not, it is right because it's the account size that I had in there and I've increased it by that much. But this will also have 3-5 grand loss weeks. Yeah, every now and again there'll be a big losing week in there. Whereas this, the position trading account, is an accurate representation. So, you know, this is a long-term account. I do draw out of it, but it stays very stable. Right, we're back into profit on the DAX and the FTSE. Still very, very, very gappy this morning. Very, very low liquidity. I hate these markets when it's like this. It's lovely because obviously because there's no liquidity, it will push. The candles will go in big, but equally, when someone does dump some liquidity into this, you'll get down to here. You know, you'll undo that in 5 minutes. So I hate trading these types of markets because, you know, at any moment this, you know, it's looking good, but at any moment it will just be gone. Kind of why I've moved the targets down a little bit this morning, because I'd rather just get, you know, if you can get it in the bank and get it done, it's much nicer thing to do when the markets are like this. But holding, trying to hold out for those big ones when you've got the opportunity for the market just to dump you. So we're heading into a propulsion gap on the FTSE at the moment. Just showing the different charts because, you know, just to demonstrate the propulsion gap differences. See, look where I've put my targets. Yeah, so that target in that propulsion gap there makes total sense to me. However, that also kind of makes sense as well because of this. This is your propulsion move to the downside that broke that low. We then try to hit back up inside there. The sellers re-added into that move. So this is definitely where we're going to meet some sellers at some point. But also there's a much, you know, there's just as much argument for getting all the way up there today. This is where your discretion comes in. I don't know where it's going. You make a decision based on your P&L, basically. Uh, 5% in a month. More than that. You've already read that. Morning, Blue Trader. Pontevedra. Summit is coming, hopefully. Fingers crossed. Getting warmer. I've just seen if there's any German news out yet. There's nothing coming out at the moment. 8:15 was the last update. Let's just refresh it. Yeah, that is still the last update. So yeah, nothing yet from Germany regarding the CPI numbers. So that's the other thing that kind of worries me this morning about the DAX. When that number hits, the DAX is going to move, and it's either going to move in our direction or it's not. So just being a little cautious. If I can get out of this morning with $500, it would be a result, I think. And then focus on the US session. Right, anybody got any other pairs they want to look at? There's not really a lot else to discuss this morning because this week's been very, very sideways. So obviously I normally do a kind of a recap, if you like, of what's gone on this week. There's not really been a lot going on. That's a lovely triple bottom going on the Aussie CAD, look. At propulsion. So buying this area here at the moment, it's either going to break down and come and retest these lows, which is 200 ADR, or it's going to hold and come back up and retest those highs at 100 ADR to the upside. Still no extensions. But yeah, there's not a lot else really to look at. Aussie dollar Swiss, again, pretty nice potential bounce point you got there. So it's rejecting, look at that, beautifully. To the pip off the weekly lows and a higher low gone in this morning. At the lows, so Aussie yen, nothing exciting. I mean, it's just literally sideways everywhere. CAD Swiss sideways. That's probably going to retrace yesterday's move. CAD yen, looks like we're putting in new bullish market structure on this. So we double bottomed basically on the previous low before that high was put in. So either that propulsion move is going to form the new down leg to come and retest this, or that double bottom is going to hold and we're going to pull back into propulsion and bounce out and test those highs. So this is a lovely long opportunity back up into those highs. Or obviously we've had a structure break to the downside and you're going to come back down, retest down here. One of them is going to happen. Euro odd, broken out to the upside, just. Upside and downside targets on Euro Yen. Flip a coin on that one. Euro New Zealand, bang in the middle of the range. Euro US, back in propulsion from yesterday. So I kind of like the Euro long at the moment on that one. Not really going anywhere. Sideways totally on the pound odd. Pound CAD, Doesn't get more sideways than that, does it? Just not going anywhere. Pound Swiss back inside range. Pound yen. So this pound yen, this double top, is kind of holding from yesterday, but that was caused by the news, by the Trump tariff blocking, if you like. So that's not really a technical reason that's come off of the highs. It happened to coincide with news, but it did coincide with news. Obviously, you can see we're putting in higher highs all the time at the moment. So strong push up there. We've got potential for yen strength because of the news yesterday. This morning. So CPI has risen, which means they're going to increase interest rates in Japan again, which will be bullish. So again, difficult to make decisions on any of these at the moment. Not gone anywhere, pound New Zealand. It is sitting down on the lows, though. Oh, you've missed it. 5-minute reversal, 15-minute reversal's already gone in. There's your 5. Your 15 hasn't actually gone in because of the gap down this morning because it's a New Zealand pair, but that looks good. For longs, back up into the highs, 150 ADR. Too expensive to trade, though, for me, pound New Zealand. A lot, whichever way you go. New Zealand CAD, absolutely slap bang in the middle of the range. Range traders will be selling the highs. Trade it down into the lows, 125, 150 ADR. New Zealand Swiss sideways. New Zealand yen. I mean, if it gets back down to the Wednesday low, nice potential long. Middle of the range. US dollar CAD rejected. So this area of balance that we had put in here, we had an upside failed auction. Basically, they wouldn't go any higher. So we went back into balance up there. So that is a price discovery move, which failed. We came back inside the range, tried a price discovery move to the downside, which has failed. Now we're back inside balance again. So market rejecting a higher move and a lower move. So anywhere in here for buys or up here for shorts. But you can't do anything with it here because you're just guessing. I mean, everything's guessing, but you'd be better off buying it there or selling it there than just taking a punt in the middle. Lovely rejection at the lows on US dollar Swiss. We've already looked at that one. And US dollar yen. So I was going to talk about this S&P situation at the moment. So we've got this 4-hour chart's good. We've got this high, obviously, which we couldn't get through. We then went into our bear market, pulled back into resistance, and then Trump happened. So we've undone the Trump move. We've gapped up, and now we are back up here. So market here this week and last week, the decision is being made as to whether we're going bull or bear. At the moment, we gapped up and then pulled back dramatically this week. So we've had the initial gap up and run, gap and go. We did take out that previous week's high, but we're straight back up into a monthly high, which has been rejected. But again, this is rejected on news. So whether it's coincidence, whether it's timed, whatever you want to believe, but we've come off the monthly level. So this here is what the market was anticipating being the start of the second bear leg. So where we are now, if we're going into a bear market, we should not go much higher than this, and we should then start to come back down and take out those lows. If we're going into a bull market, we would expect this to accumulate and break. So at the moment, it does look like it's going into accumulation. There's a hell of a lot of speculation about Bitcoin breaking out at the moment. I haven't got Bitcoin on here. Got no crypto on this platform at all, I don't think. No. So, oh, that's a lovely chart, isn't it? Crypto basically is back up at the kind of all-time highs, if you like, Bitcoin. So we broke out of it and rejected. Now everybody basically is saying this is where you buy. Yeah, because this is going to break out. And when it breaks out, you're going to get the same kind of parabolic move as you did back there and here. Yeah. So if that happens, yeah, it's likely to stir the markets and we'll get the S&P 500 breaking out as well. Bitcoin, to me, is doing what the S&P 500 does rather than the other way around. All the crypto people are saying, hey, look, we're now in charge of the markets. I'm saying this follows the markets. But who's right, who's wrong is irrelevant. And what it's doing is it's giving you confluence as to what is happening with the stock indices at the moment. So this here, if this breaks out, we're going to go bull in the stock indices. This seems to be slightly ahead in movement at the moment. But obviously, as you can see at the minute, it's coming down very fast from those highs. So I can't bear to look at those candles. Yeah, three down days basically in a row. So it looks to me like an M pattern reversal going in here, which would indicate that on the indices, we are hitting that high and we're about to reverse and start a new leg down. So it's really down to what happens with these tariffs and with Trump. If there is new trade war triggered because he can't do what he wants to do with those tariffs at the moment, and all of a sudden he puts new things in place, the markets are going to go straight into fear mode. They're going to pull all the stock money and they're going to stick it all into the Swiss and the yen, and the dollar's going to come down. So this is such a critical point we're at the moment in whether we're going to go into a bull or a bear market. The last bear market lasted 6-8 months. So, this is leg one. Some people say that might be leg two. I say that's leg one because we were going into a bear market. As soon as Trump got in, literally the day Trump got in, the market went, oh shit, here we go again. And then he put tariffs in place. Yeah. So this is Trump leg one, as far as I'm concerned. Yeah. Bigger than COVID. That is a typical bear market. This is the top of the second leg pull down. Yeah. And if this is going to be a bear market of the same magnitude as we usually get, it's going to be the biggest bear market we've ever seen. It's a new world order of trade. What that tends to do is change the dynamics of, we haven't had one for 60 years, but it changes the dynamics of business. So we no longer buy all the stuff from America, Apple, Tesla, all the stuff that makes America loads of money. We buy Chinese stuff because Chinese stuff is cheaper and of a good quality. So the dollar will collapse. The US stock market will collapse because no one's going to buy the US stocks anymore at the moment. The advantage, however, is the US stocks have tech, most of the big tech. However, most of the big tech hardware is manufactured where? China. So the trouble at the moment is the market's trying to decide what to do with these trade tariffs, and that is causing, obviously, mass uncertainty. So a lot of economists are saying this is possibly either going to be a change where we now stabilize in the stock markets and the old 8%, which someone brought up, WDS brought up in the S&P, which is your average return on the S&P a year, is no longer going to be there. It doesn't mean stocks aren't going to perform well and businesses aren't going to perform well. It just means that they're not going to reliably be bullish. They're going to be like any other instrument, which is, goes through a lot of consolidation periods. Whereas the yuan and the Chinese stocks will flourish. What Trump's basically done is shifted world order away from the US, which is not what his intention was. And if it was his intention, I don't know why he would do it, but that's what's basically happened, isn't it? So this is a really, really critical point we're at the moment here, because if this M pattern holds and the market breaks down below last week's low, that's going to confirm a second leg bear market, which means the market will be targeting down here. They will start to sell off their stocks. The Swiss, the yen will start to rally. Other stock indices will flourish. DAX potentially will probably take advantage of that because they'll start investing in motor stocks. Yeah. But Trump could at any point go, okay, 30% tariffs on all imports. Yeah. And that's going to hurt DAX stocks. So there's so much going on at the moment that we've not experienced. I've never experienced, and most traders have never experienced, because we've got this new world order, this new shift in economic movement going on at the moment with business. So it's always been like, set up a business in the US, pretty much guaranteed to succeed. Not anymore. There's a lot of big businesses in the US are going to really, really struggle. You're going to find a lot of earnings are going to get missed in the next earnings fortnight, and that is going to harm the markets as well. So it feels like we're kind of on a precipice, potentially about to drop off. However, it all depends who you speak to, doesn't it? This is why we have a market. You've got to have bulls, you've got to have bears. One of them is going to be more than the other. Yeah. Talk to anybody that trades crypto at the moment. They are excited as hell because the new crypto breakout is coming. Yeah. There's memes all over the place about, people in the future having gone, oh, he's sold at 20K, pop up to 30K. Yeah. It's nobody knows what's going to come, but we've only got history to go on. But every single chart, every economist has in the past has been based on a 60-year trade deal that started in World War II with the US and the rest of the world. That was ripped up in the last 2 months. We haven't got it anymore. So where this goes and whether this does anything like it's done in the past from here onwards, absolute unknown. But it's interesting listening to economists and like gurus in the market, the Bloomberg guys. They know what they're doing. Yeah, they're running multi-billion-dollar hedge funds. They're not doing it because they are lucky. They're doing it because they know how economics and this thing works. They are confused as hell at the moment. They are sitting there going, we just don't really know what to do. And it's very evident, isn't it, with what I've just gone through on those charts. It's very evident the market is, well, not on that one specifically, but on most pairs that you're looking at, we're like, what do we do now? Yeah. If there's no confidence in the market, there will be no movement. But as soon as the market sniffs out a bit of confidence, everyone will jump on it. It's the crowd mentality. It makes it happen. If that stock market rolls over next week, it's going to roll hard. So just be aware, obviously, what's going on with the S&P. Because it is, it's the Standard & Poor's 500. It's the top 500 performing stocks pretty much on the planet. It's the top 500 performing businesses on the planet. It's a gauge of economic growth, economic health. And at the moment, it's an ECG, which is about to drop off the cliff. So interesting where we are, but not that it makes any difference to us if you're intraday trading. It's going long. I'm going long. Yeah, it's a momentum breakout strategy. We break with momentum. So I'm just going to drag these down. I'm taking partials on both. Recovered the losses. So I'm just going to take the partials. We've got 2.5 minutes. I'm just going to pull those down, which means that it will just trigger at whatever price. Just do that on the FTMO as well. Or should I just take a partial to get to break even on the FTMO? FTMO's, I want to try and get some decent runners on it rather than being safe. So I might just let that run on FTMO, Tell you what I'm going to do. I'm going to make sure I don't lose. There you go. Locked in. Can't lose. Pushing nicely, though. There we go. US 100. What do you want to know? I've just gone through the S&P 500. It's the same thing. Euro US dollar. Which propulsion candle on the downside do you prefer as a goal? TP is at 113,168. Right. That's a bit close. I mean, that is, depends where you're in. You've just had the reverse alert on that. So potentially if that propulsion gap retests, you'll be looking at that as a target to the downside to fill that propulsion gap. But which do I prefer? I can't answer that because I don't know what your P&L is going to be like. It's your target is going to be where you think price is going. Yeah. At the moment, I can see upside risks and I can see downside targets. That's what I think is going to happen. If you get to your target and you're happy with your profit, take it. That is exactly what I'm doing here. Yeah. 13 seconds. I'm going to take profit on these trades because I am happy with the profit. If yesterday was a losing day and this morning had been different, I may have let them all run. But your decision-making process on when you get in and out is down to what you think and what you want. So where I think it's going is irrelevant. I've given you where I think it's going. I don't know where it's going, but if the market does what the market normally does, a 50% retracement in propulsion is common. 100% retracement also happens. And if this is irrelevant, because this was the news on the tariffs yesterday, which has been undone, it should undo that whole move, which means that is your target to the downside. So the question is, for you, this move here was caused when the lawmakers said, your tariffs are illegal, we are not allowing them. After that, at 8 o'clock, they said, we can't do that, we've realised, so your tariffs will remain in place. So this is a buy the rumour, sell the news. So if that's the case, if you believe that, this is your target to the downside today, 125 ADR. If you believe at some point today, those tariffs will come out and be added to, or Trump will say something else, that's going to happen. But this is my point at the moment with this whole market that we're in. I traded through the last Trump presidency. It was like this. Fundamentals mean nothing. Technical analysis means nothing. Trump opening his mouth moves every single instrument, commodity, everything out there. It moves on Trump because that's all that matters at the moment. The guy is a complete loose cannon and he will blow up whatever he wants to blow up when he wants to blow it up. There's not many people that come out when somebody's in the middle of a war, right, and say, you're an idiot, to somebody in the middle of a war with the biggest nuclear arsenal on the planet. Trump did that this week. Yeah. He's like, oh, we got great deals we could do. Day later, he's turning around slagging him off. Yeah. This causes chaos in the market. So for me at the moment, what I've just done there is the best thing to do. If there's money on the table, take the money. This is what I'm doing at the moment with this. Yeah. All these little trades that I'm banking stuff. If something gets to $100 in profit, I'm having it. Yeah, it's not much, you know, it's 0.5%-ish, 0.25%-ish. But if there's money there, take the money because literally like that, it'll be gone. Or literally like that, it'll be 3 times bigger than you're expecting it to be. So take profits for me at the minute. Actually putting a physical TP line in is pointless because if Trump says something in the next hour and causes this to completely undo, you've just taken profit there. What's the point in that? If nothing is said and it just continues to grind down, you have a choice to close it or not close it. But if you set a hard take profit, you're going to miss the massive money-making opportunities that Trump provides. If he sends it flying in this direction, you just add another position and change your price and then wait for his next idiot decision. or good decision, whatever it may be. But hard TPs, for me at the moment, aren't worth having in this market because, you know, at any point, we're seeing this thing fly today. I've just taken 2 TPs there, which is great. Look at where my TP is. Yeah, it's going to take a Trump to do that. But if Trump does that, happy days. But equally, if this afternoon when I come on the live stream, we're sitting here, yeah, at the New York Open, and my P&L up here is saying $1,400, I'm shutting it. Because when the New York Open happens, if that bear market starts going, there's no point in letting all this disappear. The New York market could fly for new highs today, which is fine, but you take what you take when you see it, because at the minute, this thing is an absolute powder keg. It can go anywhere at any time. This morning, we've got the German numbers coming out, which is obviously going to affect this as well. So there you go. North Rhine's declared 2% on a 1.8. So it's bullish euro. 0.4. It's got a 0.2. Oh, sorry, that's a yearly. So the yearly North Rhine is up 0.2. The monthly is down 0.2. Kind of cancels itself out. So there's your first declaration. There's 6 to come. 6 in totals, 5 to come. Yeah, that's what I think is going to happen on that. Although I don't think it's going to happen. Those are the options. They are going to happen. I can guarantee. You know, this is the beauty of position trading and the way that I trade. I can tell you where this is going. I can guarantee with 100% certainty what's going to happen. But I don't know which of them it will be. There's always 2 because all I know is it will either go up or down. So I can tell you where it's going if it's going down. I can tell you where it's going if it's going up. But I can't tell you which of those 2 it's going to do because I don't know. If I knew that, I wouldn't be streaming. I'd be sitting on a very large yacht, bigger than any other yacht on the planet. Don't forget your likes. Don't forget my likes. Must have put that on a timer of some kind. Only the creators of YouTube know how difficult it is to make a program every day. By the way, congratulations on content. Yes. That down move on the US 500 would be crazy. A lot of new opportunities. Yeah. It would be crazy. But it's, you know, we've had it before. When we had the last bear market, they said it wasn't going to happen, and it did. So you know, it's the, you know, the thing here, the thing with this bear market, and every move we have has got a reason, but you only know the reason after the things happened. Yeah. So this COVID collapse, obviously, we didn't see coming. No, we know. How can you predict a pandemic? You can't. That was a holy crap moment. But we then had a don't worry about it. At this point here, all the US businesses and the UK businesses and all the other businesses in the world were shut. You couldn't make money because you were shut. So we had to come up with new ways of making money. Stock prices rallied the hardest they've rallied in decades while the businesses were closed and unable to trade. That's what caused this bear market. There had to be an overcorrection because there was an overextension. People were buying stocks left, right, and center in companies that weren't performing. So their share prices got inflated. Therefore, you had to correct that. So what did we do? We corrected it. We corrected it back to where it should have been. If this had just trickled up, that's where we corrected to. Yeah. This we've never had. No one's ever undone 60 years worth of trade agreements in 24 hours. Yeah. Second World War, everybody owed the US money because they helped everybody win the Second World War. Yeah. So we put trade agreements in place, which were written in stone and had to happen. Rip. What happens from here? No one can tell you because we've never had it. We never had a pandemic. We've never had this, but we knew what would happen after this, but people couldn't predict when. And this is the when. All bear markets are caused by a fundamental shift in the housing market. the banking sector, health of the planet, world trade. Yeah, but whether you go bull or bear from here is impossible to tell. And this is why all the guys on YouTube with hundreds of thousands of followers telling everybody to buy Bitcoin are gambling with people's lives. They ain't got a bloody clue. They're only 18 years old. They've just come out of university, done a bit of Bitcoin trading, made a couple of grand, and now all of a sudden they're an expert in economics. People are following them. They know nothing. But you're right in what you say. Opportunity, damn right. If you sell the S&P 500 now, today, and you place a stop loss up there, and you do not touch it for the next 6 months, you will pay off your mortgage. Right? It's a standard trade. Risk, reward. Stick X thousand, whatever your mortgage is, right? Divide it by 20, stick it on that, paid. You've got to hold it all the way because it's going to break that leg. This is leg 1. We usually get 3 or 4 legs in a bear market. Yeah? Opportunity. Huge opportunity. Make a very large amount of money. Stick an MT4 up, open a new account, press the sell button, right? And calculate a margin call there. So you're risking 100% of the account on a margin call, right? Shut your terminal. Don't look at it for 6 months. Look at the chart by all means, but do not look at your P&L. Leave it. And then in 6 months' time, once you pay the tax on it, you might be able to pay off a portion of your mortgage. Don't forget the taxman's going to want 60% of it. Or 40%, depends how much you make. But yes. Or do better still, do this on a spread betting account. Do it on something like IG or City Index. No tax. First CPI from Germany has arrived. Yep, I've covered that one, haven't I? There's no playbook for today's markets. A lot of the US money managers wanted to reduce exposure, but they cannot afford to underperform, so they've been sucking it. They've been sucked in. Shorts have been squeezed out. Yeah, there's a lot. I mean, this is the thing. If you are a business or an investor, and you go to a hedge fund or a capital, any kind of capital wealth fund, who says, this is what we do. You give us 20 million, we will return you X%. And the S&P performs 8%, we will guarantee you a 12% return. That's what they're doing, is they're selling what they've previously performed on. Trying to perform in the same way in this type of market for any expert is impossible, because technical analysis is not going to be the same. There's no technical for this. You go back and look at historical movement on the S&P 500, and you stick a line here. Yeah. The only time that's ever happened in the past was COVID. Yeah. So if you've performed at 12% a year here and here, excellent. You didn't perform at 12% there at all. What are you going to do here? Because you've just had something bigger than COVID happen. What do you promise your customers? Yeah. This is why the markets are in this at the minute, in anything but stocks, because they don't want to put all of their money in stocks. It's far too risky. Because you've got one man on the planet that can completely control the outcome of any business. Look at Apple. Yeah. One of the biggest tech firms on the planet. He turned around and said, I'm going to make all of your products 25% more expensive in America. Apple can't do anything about it. They can try and take him to the courts, but at the end of the day, if he wants to put 25% tariffs on products that are manufactured overseas and sold in the US, he can do it. He has the power to destroy Apple, Tesla, Nvidia, any company he wants. Stock market, you can't have trust in any stock. Something that has performed well historically, at the moment, any moment's notice, can just get killed. Oil, metals, anything. Yeah, if he can negotiate an end to the war in Ukraine, 50% of the gold reserves in the world held in Russia are suddenly going to be flooded onto the market. What do you think the gold price is going to do? He's got the power to control the gold price if he wants to, simply by negotiating with Putin and Zelensky. You know, there's so much power and there's so much unpredictability. Nothing is certain. So got to be very careful with position trading, and with intraday trading, you've got to just let the thing go. If it wants to go, it will go. Look at yesterday. We had 200% ADR, 150% ADR moves all over the place. If you take a risk to reward ratio of 1 to 3 and it does 10, you're an idiot. Don't have hard TPs. Let things go. Ro, you are number 1 now. Ro's got the number 1 badge. Trading hub in number 2. Fagina, you're back up in number 3, although you haven't actually said anything. I'm not quite sure how the logic of this thing works. Anyway, it's good fun, isn't it? Somebody needs to do a tip, because we need to see what happens when they do a tip. This afternoon, David might be on this afternoon. He always tips me $10. So, yeah, we'll see what happens this afternoon. I bet he goes straight into number 1 spot. Aren't those too much euro pairs on those 7 pairs? Yes, there is. But I'm not in all of them at the same time, and I'm also not going to be in the same direction on them at the same time. So, for example, euro pound, I am long. Euro CAD, I am short. So I'm hedged on the euro. It doesn't matter where the euro goes. They will move inverse. You're so right. Banking, what's on the table has been working. There have been so many 100% intraday reversals. Yeah. You will get this. This is the Trump effect. I said about this before. When Trump says something, 90% of the time, it will undo, because what he says isn't viable. So he says something without consulting, and it can't happen. It's the buy the rumor, sell the news, or sell the rumor, buy the news. It's the A-shaped, V-shaped recovery, which we get all the time. With Trump, it happens a lot more than normal. This one that we had yesterday was caused by the courts. The courts have then undone it. Yeah. So, you know, you just got to this is ADR strategy. So the ADR dash, you'll find that either the ADR strategy will work really well between 100 to 150 ADR, or you'll get days where it will be at 200 ADR and it won't reverse. There's no kind of in between. So it's either a big strong push and then a complete undoing, or at least a 50% retracement, or something's happened that stops the market dead. Yeah, and then it does that. So, you know, when you get the big 200, if something gets to 200 ADR, I'd be thinking very hard about trying to mean revert that. Something gets to 100, 125, 150, and you get a reversal alert or a 3-bar reversal or something, those are going to be very, very good to trade at the moment. I would say for the next 4 years. Out of my DAX for today, good profit, cool. Yep, there's an argument for that. All starting to reverse. Just going to protect the FTSE. DAX has got a trading stop on it anyway. I'm just going to let these run. I've got 400 banked. It's guaranteed locked in. On the FTMO account, I'm back to break even. And all locked in. So I can't lose. It's a no-loss morning. But obviously, massively different results, look. Massively different results on the 2 accounts. Same strategy. It's taken pretty much the same trades, isn't it? This is how different trading decisions affect what you do. Yeah, you can trade the same. This is why I said, you know, if you're going to get 2 people, if you give the same strategy with the same rules to 10 people and tell them to come back with your P&L in months' time, you'll get 10 completely different P&Ls. Some of those people will be lost. Some of those people will have doubled the accounts. Others will have made everything in between, because trading strategy is about order execution. Making money is about closing the orders when they're in profit. That's the bit that everybody struggles with. No one can hold trades. Yeah, look where I've got out on this. Too early. Yeah, this thing could go all the way up to there. That could have been $1,500 this morning. Yeah, got out there. Absolutely spot on. Best exit you can get. Straight out of propulsion, exactly what I was expecting to happen. Yeah, but if this now bounces out of there and goes 300 ADR today, totally wrong decision. But the decision's been made based on yesterday, how the morning's gone, and all sorts of other factors. Same strategy. Yeah, there's a load of you in here probably trading this now with totally different P&Ls to me. I've got 2 P&Ls that are different. You've probably got a different one to me. Vitaly's out of his DAX with profit. So am I. But to do 3 different degrees of profitability, aren't we? Should probably leave it though, but not taking any chance, low liquidity yet. Umo, morning, late to the party. You dishing out the crowns now? No, it's not me. It's not me. I'm not dishing crowns out. Something's changed on YouTube where you are now in competition with each other. So if you don't talk, you don't get a crown. You get XP. I don't know what it is, but it's not me. But anyway, Elevated Trading Hub is number 1. All prices on the products from the companies going to the roof. Nobody can buy Tesla or an iPhone. Is that right? Yeah. Quite possibly. Did you notice that Elon Musk has resigned from Doge? He's left Trump because basically I think he's been told to by the board, because either they're going to kick him off the board if he doesn't start focusing on his business and stop mucking about with politics. And I guess that's what he wants to do, is run his companies. But yeah. I don't know why people are surprised by price hikes in the US. Anybody that knows anything about how the world works, it's not rocket science. If you put 10% costs on everything, it goes up by 10%. If you want to make America great, yes, you need to generate more business, but you don't do it by putting everyone's costs up, because the only person that actually loses is the end consumer. Everybody from day one knew this, and everybody still knows this. We knew it 20 years ago, 100 years ago. If you put prices up, people pay more money. People paying more money makes people poorer. So when you say make America great, you need to clarify business or person. Making America great for business, tariffs. Making America great for people, not tariffs. Everybody voted for him on making America great, but he didn't actually say who he was going to make great. What he did was make the market go up and down by pumping it and make his billionaire mates more billions. That's not making America great. That's making the 1% richer. Very different, isn't it? Crashing the stock market. It's not making businesses great either, is it? Yeah. So if he's not making the consumers great and he's not making the businesses great, who the hell is he making great? I don't know why you're still in power, honestly. Why have they not gone, no? If this happened in the UK, and it did, remember Liz Truss crashing the market? Kwasi Kwarteng crashing the market? What did we do? Kick them out the next day? Yeah? Excuse me, you just collapsed our economy. Bailey, can you bail us out? Yep, no problem. Bank of England comes in, prints a load of cash. Here you go, we're back to where we were. Right, you out, you in. Trump, felon to start with, in, crash the market. Pump it a little bit, crash it a bit more. Why is no one going out? Why? Just lunacy. I just don't get it. Anyway, I don't know. Long-term plan there somewhere, isn't there? What I don't understand is we are in a cost spiral. Every price going up. The people need more money. The companies have to pay more money to their workers, so this doesn't stop. Yeah, this is why tariffs don't work. What they do is they create an exponential CPI spiral. CPI goes up, which means interest rates go up, which makes mortgages go up, which makes CPI go up, which makes it just never stops. And what happens is the opposite end of the spiral is the people getting poorer. He knows this. He was told this. He tried this before and it didn't work. His last presidency, he came in for 4 years and tried the tariff route. It stopped very quickly because it was evident it wasn't going to be effective. Everybody told him. He listened. This time, he's not listening. You know, it's like even the world is telling him. China's saying, nope. And he's going, right, well, it's like a child, isn't it? Right, if you don't do that, I will take away your iPad. Right. Well, you haven't got anywhere to go from there because you want it. China is sitting there going, you just keep crashing your country. You keep doing that because we're just going to get bigger and better. And that's exactly what's going to happen. But he can still, I think he can still reverse it. But I don't think he can repair the relationships. Europe's not interested. UK, for some reason, we have to be the lapdog, but we are. But other countries, nah, not interested. Canada, off to China. Brazil, off to China. Everyone else, Mexico, kind of need to supply the drugs into America, so they've got to stay with them. But other than that, every other country on the planet has got another option. 2 other options, really. Anyway, we will see. What I don't understand is, I've already answered that one. My RSI and ADR dash are always significantly different to yours. I sometimes wonder if I'm cross-checking the wrong instrument. I've learned just to trade my dashboards and ignore everyone else's. Yeah, trade your charts. I was taught that a long time ago. When I first started with one of my main mentors, he used to post charts to our group and with analysis on them, and I would always say your moving average is in a different place to mine. So his moving average would be like here, right? And the wick of that candle on mine would be down here. And I'd be like, your moving average is different to mine. I'm going to get different signals. It's not going to work. Because I was panicking about the infinite detail. There's no such thing as an infinite detail. It's irrelevant. It's going to bounce somewhere around here. It's going to come back down somewhere around here. Yeah, it's not going to hit it to the pip like that. It did there. It did there. But none of the others did. Well, it did there as well, actually. But you know, it's not about accuracy. And if your dashboard readings are different to mine, and somebody's been posting that their dashboard on ADR is different to my dashboard on ADR, it will be, because as I've just proven here, different brokers have different prices. An indicator is an average or a calculation of price movement. If you've got different price movement, you get different readings. Simple as that. Yeah. And some brokers are way, way, way out. Yeah. Some brokers are much more. I've just shown you the gap here. Look, you know, if you weren't here earlier, when you see the gaps forming on different instruments, yeah, the gap on the FTSE there, and then the gap on the FTSE on Global Prime. Yeah. Look at the difference in that and that. Your moving average RSI and ADR, because of that price difference there, is going to be different. Different. So trade what you get. When you get a signal to go short on the pound Swiss because it's hit its weekly range, I might not have that. What's going to happen is you're going to press the sell button on the pound Swiss and it will either go up or down. The fact that you've pressed the sell button on the pound Swiss has got absolutely nothing to do with making money, because the pound Swiss is either going to go up or down. If I'm not in it, I don't have a decision to make. If you're in it, you have a decision to make. When it goes up, you make a decision as to what to do. When it goes down, you make a decision as to what to do. If you press a button at random without an indicator, that's no different to waiting for an indicator, because you're still taking a 50-50 random shot at a long and a short. These indicators that I create are there to show when price has pushed and ping an alert at you. You don't need any of them. If you remove them all from your charts, do you think that pushed down yesterday? Yes, then buy it. It didn't hit RSI. Doesn't matter, does it? We are mean reversion traders. Therefore, if it's pushed down, it should mean revert. If it's pushed up, it should mean revert. If it's pushed down, it should mean revert. If it pushes up, mean revert. Up, revert, up, revert, down, revert, up, revert. That's all it does. You don't need an indicator. If something pushes down hard, buy it. If it pushes up, sell it. If yours is there and mine is there, it's irrelevant. It's done that. The reading here has got nothing to do with making money. The reading here has got button pressing. That's all it does. Creates opportunity. When you press a button, it creates an opportunity by creating risk. It doesn't matter. If my ADR is 61 and yours is 60, and it gets to 59.8, neither of us get a trade. If it gets to 60.1, you get a trade. If it gets to 60.6, you're still in your trade. And then if it drops like a rock, well done, you made money. I didn't. But I got a trade on the CAD Swiss. You didn't. Doesn't matter. It's irrelevant. Trade your charts. You're pressing your buttons. You're taking your risk. There's nothing that says that you should be using a 70, a 71, a 72, a 75, an 80, an 85, or whatever. There's nothing that says one of those is better than the other one. They're different to each other. But none of them here were wrong. Doesn't matter which one you use. Didn't get there, but they're all right, aren't they? Because it did that. It does that. Yeah, that's what it does. That's all it does. Up and down. Which is why when it goes up so far, when you're in a trade long, you're thinking, I need to get out because it's gone up. What you're expecting it to do, come down. Why? Because it's gone up. That's all it does. It goes up and down. All it does. Every bloody day, all day long. So whichever signal you use, the same as, like we we're just talking about with the US dollar Swiss, no, pound US dollar. No. What was it I looked at? US dollar Swiss. It was US dollar Swiss. No, I don't know. It's something I looked at, wasn't it? And I said, where's it going? It was a downward movement, so it's either going there or it's going there. So with this one, same example, it's either going there or it's going there. If you press the buy button now, there is no signal at all. It did not hit that low. There was no signal. There's a weekly level there that it rejected out of that propulsion gap. There's a million ways to press this, but pressing the button's got nothing to do with the actual money-making process. The money-making process is whether it goes your way and you take the money or not. This is why I don't believe in risk reward. Everyone goes, you've got to have a 2-to-1 risk reward ratio. I've got a million strategies that have a 0.5 to 1 risk reward ratio that make an absolute fortune until they blow. But on the way there for a year and a half, they make a killing and then they blow the account. But they make money as much as that makes money. That will have a lot more drawdown than that will. They're just different. But the reason they make money is because they take money. They don't, it's not because they have a specific input. And I've done this in the members streams. We did a session on, flipping a coin, random trades. We built an EA that trades at random and it makes money, but it will always return to zero because it will make money 50% of the time, lose money 50% of the time, and then it will come back to zero. Because if you have a 1-to-1 risk reward ratio over the period of a X time, you will come back to where you started. You may have gone up loads, you may have gone down loads, you may have done this the entire time, but you'll always end up there on a 50-50 1-to-1 risk reward ratio because by probabilities, you will always end up at 50%. Add a 1.1 risk reward ratio and you will find you'll end up somewhere like that over a long period of time. But you could well draw down like this for half of it and then come back up and make the 1% like that. Or it could go like that. And it ends up there. It's got nothing to do with pressing a button. It's got to do with taking money and letting them ride. That's what I say with TPs at the moment. TPs at the moment are the worst enemy. If Trump says something and it ends up at 225% of ADR today and you were out walking the dog, if your TP was there, that's what you get. If you're out walking your dog and you get home and go, holy crap, that's what you got. TP stops you making money. Any order in the market that is hard, like a stop loss or a take profit, is guaranteeing an exact result. Doesn't work, does it? It does work sometimes, but not most of the time. I think the correct will be make America great for rich people. Yeah, exactly. It will be. The rent for an apartment goes up every year. We don't stop this. We don't have enough money for everything, so the companies don't have the money. Not sure I understand that one. But yeah, I mean, the thing is, this is what we've got in the UK at the moment with the cost of the doctors. So we've got all the young doctors going on strike wanting a 35% pay rise, which sounds astronomical. If you look at their pay rises over the last 5 to 10 years, everyone else's money's been going up as the cost of living has been going up, as house prices have gone up, as rent's been going up. Doctors have been going up like this. So they're saying, well, we need 35% now just to get back to where everyone else is. Like, absolutely bloody right you do. Why have you not been going up the same as everybody else? It's like your rent as a doctor, your cost of houses as a doctor, your bills as a doctor do not stay low because you're a doctor. They go up the same as everyone else's. You're earning a little bit more money than everyone else, which means you buy a slightly bigger house than everyone else. But the fact is those slightly bigger houses are still going up. Yeah. Why train for 7 years and spend £100,000 to get into debt to become an expert in a field which saves people's lives, only to earn the same amount as somebody that drives a dustbin lorry? Yeah. A garbage man. I don't know whether you're in the UK or the US at the moment, but whatever country you're in, the guy that comes around and picks up your rubbish, the guy that drives the van earns way more money than the people that pick up the bags. They earn pretty much just under what a junior doctor does. And they've gone to college, university for 7 years and spent 100 grand getting themselves into debt. Whereas they could have just basically come straight out of school, learnt to drive an HGV, got a job doing that. And they could have sat on their phone playing Candy Crush while they're waiting for the people to pick it up, put the phone down, drive forward 10 foot, pick your phone up, play more Candy Crush, put your phone down. That's basically what my bin man does. I've seen him. Can't win, can you? The only way you're going to make money in this world is making money for yourself. If you rely on someone else, you're in trouble. It's going to get worse. Anyway, I'll leave you there with that cheery thought. So why don't you just buy the opening range breakout EA, stick it on a chart and earn this type of money every day? Lovely. That was my advert. See, I spent all this time doing this stream and I stuck the advert in right at the end. I'll be back this afternoon at 2:30. Let's just see if we had any more German news. Still only North Rhine at the moment. So still more no CPI. So just be aware of that on the DAX. This could move quite quickly when we get some more declarations of CPI coming through this morning. So, you know, obviously it can go up as well as down. So just keep an eye. So yeah, back this afternoon at 2:30. Before I come on, we've got the Canadian GDP and PCE for the US dollar. So we might well have some fairly decent volatility coming in. So I'll judge it basically when we come to the open as to whether or not the market's already done a massive move. It is Friday. Typically, it can be quite choppy Fridays. And if you've done a load of price action before market opens, quite often we just sit around and range. So it might be a case of deciding to just cut the money and run this week and just say, right, had it. So I'll have a look at it later when I come on. We'll see how it is. May well just reduce risk. But we'll see. We'll see what happens this morning, in the afternoon for those news events. All right. So have a good day. Anything you need, let me know. I'll be in Discord or Telegram. Back 2:30 this afternoon. Have a good one, and I'll see you then.